All right, guys, it's Paul Singh, the market speculator with bullsonwallstreet.com. Today, I'm going to go over the parabolic short setup. This is pretty much the second part of this video series here. We went over this when I made my entry. Now, today we exited completely, so let's go over it here. And you can see here on the Bulls on Wall Street page, where you can sign up for a monthly plan here for $99 or an annual plan for 50% off here. We traded this in the trade report, and trade report members received alerts to these trades here. This is a trade report here. If you go in, you can see the two NUGT exits today, one at 129.16, one at 137.44, two exits here. And the entry was on July 6th at 165.24. And at the end of this video, I'll actually recap some of these other trades I've made here. So stick around for that. This will be really quick here. Let's go over NUGT. This is the parabolic short setup. One of my favorite setups, one of the most explosive setups I trade. And because of that, it can also be one of the most risky. So you really need to know what you're doing here. So we're essentially counter trend trading here against a strong trend. That's why it can be difficult to time and why you have to be really careful. But if you know the clues to look for, it's almost a slam dunk entry. Now we go over this in the boot camp, which is starting up here in a couple of weeks. So go ahead and go on Bulls on Wall Street, and you can take a look at the boot camp. And I'll be doing, while the focus is day trading, I'll be doing a few days of swing, and I do go over this setup much more in depth. But if you can see here, what I was looking at was NUGT, which is the triple leveraged ETF. Any time I trade one of these commodity type sectors, I always go for the triple leverage to get the added volatility here, and these things can fly, as you can see here. Going back just a few months, it was at 30, and when we shorted it, it was at 165, almost reaching 170. Now, 30 is not where I was really keyed in on. It was the play off this base here. So if you can see here, this thing had run from 70 to 140, which is about 100%, where I really start looking at these parabolics, and then had climbed even higher than that, up to 170. And this is where you have to be careful with some of these parabolics. You look at it, you think it's up 100%, it has to pull back, you go short, and you get crushed. And that's what would have happened here. But there's some clues we look for. Essentially, we're looking for that last gasp, the real big push where basically the dumb money is starting to get in. Because what happens is you watch this thing go up, you watch this thing go up, and the retail trader is saying to themselves, I'm going to wait for a pullback. I'm going to wait for a pullback. Eventually they can't wait anymore. FOMO sets in. They feel like they're missing out on the trade. And when they all jump in, that's the time the stock is usually going to pull back. And with NUGT, we see the same thing here. Now, we're trading a gold ETF, but this is not the underlying gold ETF. This is gold miners, so it can move like a stock rather than just with the gold currency here. So if we look here, we were getting those signals here. When you see volatility and gaps increasing when it's already at extreme levels, that's your clue to get in here. Now, usually what I'm looking for is like a big inverted hammer, some kind of bearish engulfing candle. I did not get that here. For that reason, I took a bit of a smaller position to protect myself with 150 shares. Still, with the way this thing can move, we can still make a lot of money here. So off the 150 shares, we got out here today at 137 and 129. I don't have the exact prices, but someone in there, the average exit was 133.30. So about 32 or 33 points here from that move down. Total gain, $4,800. So one of my favorite setups here. We've traded it multiple times in the trade report. I actually keep a few other accounts, more aggressive accounts, and in those I trade this setup all the time. Some riskier junk stocks that I'm looking at that I look to trade in those accounts. But here you can see classic setup here. Now let's take a look at some of my other trades here. We can see here, these are the alerts you get when you're a trade report member. On July 6th, I also entered Twitter And if we take a look at Twitter here, we entered in the low 17s. This was, you might be looking at this and wondering, where's the setup? There is a bottoming formation type setup here, but essentially what we were doing, we're looking for relative strength stocks post-Brexit, and that's what we got here. We got the big run up. Once we saw that the Brexit sell-off was over, jumped into Twitter, and we're up to 1856. The target is actually above 19, so we're getting close here, but really nice trade there. Our biotech position, which also was a relative strength stock, post-Brexit, which is surprising because it's been lagging previous to Brexit, entered at 31.50. We're up around 35 or 34.50 right now, so doing really well. The VIX position was a loser here. This is an automatic. During a sell-off, I always put on a VIX position with low risk. Lost 2 points here, no big deal. I was actually happy to lose here because that means my other long positions are doing well. The VIX was in there to kind of balance out the rest of the long positions. We got Facebook here. We just got out of yesterday for a little over about a 3.5 point gain here. And then the Nugget trade. Now I did make one entry today, and that's Twilio. So we'll see how that does, and I'll do a recap video once this trade is over. So until then, you can keep tabs on me in the blog here at bullsonwallstreet.com. And if you want more, of course, you can sign up for the swing trade alert service.